Good morning or good afternoon, everybody, depending on where you are. I'm delighted to welcome you to the shared interest conversation about fintechs in Africa. My name is Dorcas Onyango, and I am the program director for shared interest, sitting right here in Johannesburg. Today, we're going to talk about small businesses and how technology is trying to empower them. Small businesses in Africa drive the continent's growth. However, often they struggle to access capital. Shared Interest tries to help these businesses by providing partial credit guarantees to financial institutions to enable those financial institutions to lend more to small businesses. Amongst the sectors that Shared Interest is really focused on empowering is fintech. And the reason for this is simple. Across Africa, where we largely operate, fintechs have managed to connect the marginalized individuals and small businesses into formal financial services. And thus, they're contributing to economic growth in Africa. However, despite their importance to the region's economic development and being small and growing businesses, fintech companies in Africa are facing barriers to affordable capital. They themselves are empowering other small businesses or in a problem that they are experiencing. So today, we are going to be talking about how to unlock a new era of economic prosperity for small businesses across Africa by overcoming fintech challenges to accessing financial services in Africa. We'll focus our dialogue on the contributions and the challenges faced by fintech in Africa. I am pleased to be joined by accomplished fintech professionals in Uganda, Kenya, and South Africa. They will help me to unpack the significance, the successes, and the setbacks of fintechs across Africa. Let me introduce you to my panelists today. I'll start with Juliana Rotich. Juliana is a fintech pioneer, leader, entrepreneur, and technology advisor. She's also a board member and an angel investor. This MIT alumni is currently the head of Fintech Solutions at Safaricom. This is a telecommunications company operating across Africa and truly leapfrogged fintech and mobile money across Africa, and thus empowering millions of Africans to be financially included. My second panelist is Ivan. Ivan is the founder of Mikono, and he also works as a data scientist for the Coca-Cola Beverages Africa Group enterprise. He leads data analytics across the group. He's very passionate about utilizing his skills in technology and business to develop innovative solutions that improve the productivity and efficiency of businesses. Ivan today has joined us because he's created a user-friendly bookkeeping solution for small businesses. And we look forward to hearing more about how he wants to streamline financial management for small businesses. And the third, but obviously definitely not the least, is Khanya. Khanya is a co-founder and a CEO of an organization called Setana Capital that's operating right here in South Africa. She's a financial services professional with a passion on ESG investing and impact investing. She has a highly successful track record in leading financial organizations to innovate their initiatives to be more inclusive. Setana has an experience in working with nonprofit organizations and small organizations in both the informal and formal sectors of South Africa, expanding their access to financial services that they need to keep their businesses afloat. Before we proceed, let me just give a moment to my panelists to say hello.
Hi there. Just a quick one from my side there, Dorcas. It's Setana Capital. But I just want to quickly, put that in there. Very interestingly enough, it's a South African business, but with a Swati name. Setana meanings that we help each other. But yeah, happy to be here, and thank you so much for having me.
You're welcome, Khanya. All right, let's get into the meats and the cracks of the conversation for today. let's first talk about fintech and how it's empowering businesses across Africa. And I'll start with you, Juliana. Juliana, Safaricom is a leading telecoms company in Africa. And as I've said before in your introduction, your organization has spearheaded the fintech revolution through their innovative mobile money platform called M-Pesa. M-Pesa has truly put Africa in the global platform. And Safaricom also collaborates with various fintechs in trying to expand the range of financial services that it makes available on the platform for its users. Can you tell us a little bit more about how fintech is empowering small businesses in Africa based on your experience, and how Safaricom is serving small business customers by empowering fintech?
Thank you for having me, Dorcas. It's really great to be here and also to meet the other panelists. So I'll start by just sharing a few things about Safaricom. It is not only the largest telecom provider, but it's also the mother or the home of M-Pesa, which is the largest fintech in Africa. It is now in 8 different countries, with Kenya being the root of it, and it has now spread in various African countries. The most recent addition to the M-Pesa Africa footprint is M-Pesa Ethiopia. It is an ecosystem that is growing. And specifically to your question around how we empower and transform lives of not only consumers but businesses, we have an ecosystem that consists of merchants and businesses and agents, and then we have consumers, and we also have developers. Out of the businesses, we have 4.6 million merchants and 276,000 active agents. We empower businesses by providing not only the money transfer services that M-Pesa is well known for, but we also provide not only agents, because agents are businesses. They help us with the part of the business where anywhere here in Kenya, it's very easy to get access to money. You can either check in or cash in or cash out, very similar to, not too dissimilar to how you would use an ATM in other parts of the world. So in other parts of the world, they may have an ATM network. Here we have the M-Pesa agent network, so that you can be able to get your money into your e-wallet. And once that money is in your e-wallet, your M-Pesa wallet, then you can use it to transact. So that's number one. Number two, so one is the agent network that is available for the businesses. And then businesses have something we call Lipa na M-Pesa, which is Swahili for pay with M-Pesa. And they have a Lipa na M-Pesa number. It's ubiquitous here. You will go to a shop and you'll see the Lipa na M-Pesa number. And on your app, if you have a smartphone, on your M-Pesa app, you'll be able, as a consumer, to be able to pay to that merchant, and you'll quickly be able to get your goods or services. So it's a very ubiquitous way of transacting here in Kenya. So when we give merchants the Lipa na M-Pesa till, it enables them to collect payments. And we also give them something called the transacting till, so they can use that same till to pay their workers. They can use that same till to pay bills, so they can pay for electricity bills or whichever other bills. And then last but not least, we provide them with the business app, which makes it handy for them to see all their statements and to track their businesses. And they can even add cashiers, so you don't have to be physically at all of your businesses. So there are typically some small businesses that have several branches or several locations, or in some cases, several types of businesses. You'll have a gentleman who has a business as he has a barber business, he has a copy printing business, and any other business. He can track all of these things in one app. And then he can add his various cashiers in the various locations into that one app, and he can track all of that. And last but not least, we offer these merchants. We just launched something called Merchant Overdraft called Boost La Biashara, which means boost for your business. And it gives you an overdraft facility as a business so that when you're purchasing inventory or you're a little bit low on your cash for your business, you can access some short-term capital so that you can complete transactions. And then last but not least, we're always engaging with our merchants to upskill them and share with them financial literacy content. And we're doing more in providing also insurance and wealth management services. So there's a lot that we're doing to empower businesses. And then just one last point that I wanted to make is we have a developer network and we have application programming interfaces or APIs. And this is the way that not only banks, but fintechs, so some of the young men and women here in Kenya with startups in the credit space, in wealth, and even consumer lifestyle, they can plug into the M-Pesa network using these APIs, code whichever application they have, and then they connect to us for the payments journey. So we make that super easy. There is a developer.safaricom.co.ke, these devs that we engage with our team to make sure that we're serving them are able to connect, quickly use the sandbox, get their applications connected and integrated into M-Pesa, and thereby enabling the flow of trade and various interactions that go even beyond what we as M-Pesa offer. So I'll stop there, but that I think gives you a bit of a color as to the things that we do to empower businesses as a fintech and also as Safaricom.
Thank you. I mean, honestly, going beyond payments and really trying to provide a bouquet of tailored services for small businesses is definitely the way to go for businesses in Africa. All right. So with that, I'm going to move on to Khanya. Your organization is empowering small businesses in South Africa through tailored financial solutions as well. But you are very much focused on trying to improve their access to stock. And it may be that you, from what I understand, you are driven by understanding data around informal trade, and you transform this into a solution for small traders. Can you give us a little bit of an overview of the specific problem that your fintech solution aims to solve and how, and what motivated you to focus on the informal sector of small businesses?
Thank you so much, Dorcas. Yeah, so Setana Capital, is a working capital fund that is focused on informal retail entrepreneurs here in South Africa. So these are your businesses that are typically located in what we call townships here, and they run businesses that we call spaza stores. And I think that, across the world, these would be known as your mom and pop shops, where people can go after work just to, grab some bread, grab some milk. So these are businesses that actually really empower their communities. And they have been run, throughout the decades by, moms and dads who've been able to take their children through school, and they've been able to really, support their families. However, what you find is that because of the lack of your typical accounting documentation, financial statements that a traditional financial services look at, they don't actually get access to funding. And it's quite unfortunate because, as we all know, to take your business to the next level, that working capital is very important. And for these businesses, your working capital related to your inventory and your stock becomes quite, important. You find that these are guys who are able to turn over, a significant amount of stock within 2 weeks. And if you're able to help them to stock up rather than having to go back to their product distributor, their product supplier every day, you're saving them time in terms of like leaving their shops, because they man the shops themselves, and you're also saving them costs from the transport costs. So those are the kind of entrepreneurs that go about doing that. We follow an embedded financing approach. We partner with their product distributors, local cash and carry groups that they buy from, your FMCG manufacturers. And what we say is that you have data on these clients. It's not your typical data of balance sheet, income statement, and all of that. But from the relationship that you have with them, you have their purchasing history. So really, our solution is quite innovative in the sense that we just make use of that purchasing history. And what we found has been quite encouraging. South Africa is quite unique in the sense that you have a very developed financial services sector. It's one of the best in the world. And because of how developed it is, it does typically then make it difficult for those banks to service these entrepreneurs. So it's been very encouraging to also see that, okay, we can prove to our investors and we can prove to other parties within the ecosystem that there's value to be unlocked here, and to also prove that, okay, these are individuals who actually pay. Usually the perception is that we're going to give them, a loan and then they're going to run off with the money. But, we have a very, very low, default rate, currently sitting at 0.5% and just under as well. So it's been very encouraging to go on the journey and to speak about what motivated us. I think it's also just our lived experience, growing up, within the space, being aware of the fact that, number one, this works, despite the perception that, it's not as fancy and it's not as sexy. We know that at the end of the day, these are cash flush businesses. We know that it's a multi-billion, rand industry, and we know that these guys are good for it. And yeah, the last thing for us is just that we're able to be in a position whereby we support all nationalities here in South Africa. It's very interesting. What you'll actually find is that a lot of the spaza store owners are actually, Bangladeshi. They also are, from Somalia, Ethiopia, and the like. And our model enables us to be able to support them. So yeah, that is Setana Capital.
Yeah, I mean, really impressive. I mean, the reason we're here today is we all understand that small businesses really, they are the engine of economic growth, empowerment, prosperity across Africa. And to have somebody like you, Khanya, move from a very sophisticated financial system and realize the need that's required in small businesses and recognize their power in their numbers is fantastic. And really what we are trying to do here at Shared Interest is, cultivate more relationships with organizations like yourselves, because we also recognize the potential of small businesses if they are empowered. And technology does certainly allow most of us to go beyond the obvious, which quickly segues me to talk to Ivan about technology and data. So Ivan, Mikono is something you've started. You have a passion of improving efficiencies for organizations, coming out of one of the biggest brands, and like Khanya, recognizing the power of small business in Africa. You're now using insights and technology to drive financial inclusivity. How are you empowering small businesses to keep their records? We're keen to hear the impact that you anticipate your fintech solution will have in terms of bookkeeping for small businesses, and just in any other way that you plan to empower them.
Thank you, Dorcas, and thank you for having me, and glad to to be part of the conversation with the rest of the panelists. So with Mikono, I have to say, we recognize the transformative power that technology has in leveling the financial playing field, like many of the panelists before me have spoken. And what we've realized for the bookkeeping or ERP space, for many of the businesses operating in Africa, these what exists on the market have generally been quite cumbersome and quite inaccessible for most of them. So what we're doing with Mikono, we've really built Mikono and designed it with a focus on simplicity, trying to keep it as simple for an entrepreneur who is not necessarily very tech proficient, to make it something that they can easily interact with, navigate, and be able to transact, but also see what is happening. Also with the mobile penetration on the continent, we've tried to make sure that Mikono is optimized for mobile. We find many of the more traditional ERPs not really optimized for mobile. So that is something that we've really focused on, so that on the go, and that's what Mikono means in many of our dialects, hands. They can have their business in their hands and be able to transact. We try to make sure they can get the insights right on their device and get benefits from the record keeping. I think many times record keeping is one way, but try to make sure they can use the same application to understand and get a sense of what is happening. And of course, sometimes we ask, why build this when there's so many out there? We care about things like languages. We know Africa is quite diverse, so we really try to have support for various languages on the continent, that represents our diversity. And also, to what Juliana was talking about, things like the integrations with the local ways of moving money around are things that we care about and are actively doing, with Mikono. In terms of the impact that we anticipate or desire to have, I'll just give an analogy. For the past few years, I've been quite active as a personal, fitness trainer, with a bias towards strength training, and I mean, one of the things about the strength trainings, as people engage in it more, there's an aspect called body composition that changes more towards muscle and more strength. And over time, what happens is then your metabolism goes up, and all the resources that you take in terms of food actually easily deployed to muscle, to strength, and not to fat, which ultimately can make you sick, which is not what we want. So with that analogy, some of the best stories of transformation, sustainable transformation that we've seen in this I'd say workout or fitness space is where someone comes, a student or a client comes, trying to do it because they have to tick off the requirements of the doctor or healthcare. But when they get to a point that they start to see the changes in themselves, that body composition starts to change, the energy, the mood, the presence with which they carry themselves, it shifts to become something that they cannot live without. Something that they had to do now becomes something that they want to do every day and cannot live without. And we're really hoping we achieve something similar with Mikono. We want businesses to go beyond trying to keep records for their bank, but they realize this is something that is good for them, that makes them efficient, that makes them make the right business decisions. And the second part of Mikono, which gives them access to financiers who would potentially deploy capital, loans, and the like. We hope, just like well-trained and transformed body, will find these businesses more efficient and give them that ability to deploy this capital because they're now more responsible. They now understand what is happening in their business. So in summary, those are the two things. We hope that on the one hand, the ERP that gives them this simplified way of doing business will enable them to be more efficient, and then the capital that they'll still get through the platform will allow them to be more effective because now they're better at running their business. So that's the impact that we seek to have with Mikono.
Thank you. So very much you're trying to make sure you address the information asymmetry between currently that the small businesses have and their capital providers, but at the same time, you just want to cultivate the culture of business reporting within small businesses. Okay. Once again, we appreciate that shared interest, because one of the things we hear consistently is that small businesses do not have records. Yet we've heard from Khanya that small businesses are paying their loans, and so they know how to run businesses. They just need the support to be able to articulate their transactions. And I think that's what Mikono is trying to do. All right, so the three of you, our panelists, have done a good job at outlining how fintech is actually empowering small businesses. Safaricom is very much enabling them to run proper transactions and payments being at the base of it. Senata is trying to do a good job at saying, you know what, they need stock, they need working capital. We can't go beyond the traditional ways of looking at their data. And Mikono is really looking in the future and saying, you know what, we are not just empowering small businesses because they need capital, because they are fundamentally important businesses for Africa. And we can't change the culture within them to change how all of us look at small businesses in their support ecosystem. Even with knowing all that businesses are great, they're important for Africa, and they're empowering, they're driving economic empowerment in Africa, we still hear that they have challenges. And I want us to have a little bit of a conversation about that. I understand that almost $2.4 billion was deployed in Africa in recent years to support fintech. However, I also understand that fintechs, especially those that are homegrown, are not necessarily receiving the funding that they expect. And so let's talk a little bit about what the challenges are, or what those setbacks look like. And then we will talk a little bit about what the solutions can be. And maybe let me start with yourself, Juliana. Drawing from your experience as a founder and working with fintech, have you seen that these are some of the setbacks with your fintechs? They seem to be doing a good job. You're working with many of them at Safaricom, but there's also the claim that they're not well funded or cannot access capital. How do we unlock opportunities for SMEs and further amplify their impact?
Thank you, Dorcas. So my experience before I joined Safaricom is I actually started a fintech. So the point about accessing capital is indeed true. And not only is it true from a startup perspective, but also from a funding perspective, because before that, I worked for a venture capital firm. And as I'm sure everybody here knows, if you're raising a fund for Africa, particularly either for Africa, investing either in agri-tech or fintech or health tech or wealth tech, or any area of Africa, we've had some strides and we've had lots of improvement in terms of the flow of money. However, more needs to be done. We've seen the African narrative change. I remember in 2008 when I was in Silicon Valley and trying to make the case for investment in Africa, particularly in tech. And frankly, I remember sort of crickets in the room and looks like, why would I want to do that? So point number one is that the narrative has changed. However, it still takes long to raise money either for a fund or as a startup yourself, you will face the challenge of raising money. However, it's not all super difficult. Super doom and gloom. There are opportunities and there are partnerships that have enabled targeted investing. And I think this is where organizations like Shared Interest, bringing together and actually just leading this conversation really helps, because these connections between the impact investors, anchor companies like Safaricom that have the infrastructure and the data on transactions, and they even have we also have Safaricom has data on the let's say turnover for some of these fintechs. So putting together that partnership between anchor companies like Safaricom, startups, and impact investors. We've got colleagues as part of Safaricom, part of business development, and something we call Safaricom Ventures. And we're looking at we have invested in the past and will co-invest with various partners in fintechs that that are strategic for our customers and also for ourselves as a business. So there are possibilities of creating these international partnerships that can help to solve for this problem. There is funding, but it's unevenly distributed. And also it depends on which networks that particular startup is able to tap into. I have seen some very exemplary startups that are well run and really pay attention to the unit economics, because at the end of the day, you may hear a lot of challenges about funding. However, one of the key things that we need to talk about is the business models and the unit economics for these startups, because sometimes you may have a startup that is overly dependent on VC funding and not necessarily have a sound business model. And that is a recipe for difficulty. Maybe not now, but later it'll come. If the unit economics are not good, it invariably catches up. So yeah, I think there's a lot to be done. And generally, I think globally, we've seen a bit of a slowdown when it comes to the money that is available for fintechs. Yes, it was growing. In fact, in 2021, those are really a high in terms of the flow of investment into not only Kenya, but also Nigeria and South Africa. However, with the global macroeconomic challenges that the whole globe is facing, there's been some rebalancing around available capital for investing in Africa.
Wow. It's good to hear that there is some improvement in available capital, and you also talk about something important, which is helping the fintechs have a viable business model. And shared interest certainly exists to guarantee loans so that they can have access to credit. But typically, we also believe, as you've just said, that capacity building to help small businesses, whether they are fintechs or other types of businesses, are really important so that we can help them position themselves for the support that may be coming in. But Ivan, let me turn to you again. And everything that Juliana is saying is true, which is helping fintechs themselves have a business model that in itself is attractive for funding, and while it's solving the problems. As a small business, what are your constraints and challenges? You are trying to address the very problem that Juliana has talked about, which is help small businesses articulate how they are running their businesses well. But for yourself as a small business, what are some of your constraints and challenges, be it for capacity building to build a good business model or to access capital to scale the Mikono bookkeeping solution? And what support would you say that a fintech like yourself would need to really attract both financial support or other types of support?
Thank you, Dorcas. And I think you've touched on some of the numbers, and Juliana also gave some context there. If I just take a step back, so yeah, 2.4 billion, I think is the number that you called out, probably about 2020.
Yes.
I probably should not even go into the US number, which is incomparable. It's probably about 150, around the same period. But if you look at something like India, which in theory should be a bit closer to home, I mean, similar size, about 1 billion people, on the continent. So where we have about 2.4, that number, for India is probably between 12 and 15 billion, So even then, we're still, while we've been making progress, I think we still have a long way to go. And I think there's many factors. Yes, the infrastructure is part of it, the education and so many things that they've probably done, better, that allows them to be, quite bigger. But I think, the key message is there's a long way to go. So for us, some of the challenges, of course, one, there's a lot of an awareness and education challenge. for some of the clients that we're dealing with, for them to understand that it's more beneficial to you as a business to move from the traditional ways of doing business and bookkeeping to more digital ways of doing things, is certainly, I'd say, work that we cannot do alone. We're engaging in, but with the support and some of the the platforms that Juliana was mentioning, leveraging some of those, enable us to go further. Otherwise, it's not something that we, as an SME, can just tackle alone. I think the trust in these digital systems and platforms is a drive that is beyond us as a small business to to develop in our customers and clients. But capital for sure is another challenge that we grapple with. The capital for scaling. There's the traditional ways to get capital, and funding on the continent. If you're thinking banks and all, are generally not necessarily suited to startups like ourselves. And maybe it's no wonder that in the US with Silicon Valley, you have VCs, which is probably more aligned to that mismatch between the cash flows that the business needs today and the expected returns, which come much longer in your development cycle. So we don't seem to have that very well developed on the continent. And while we call out the 2.4 billion, again, I think you've both mentioned this is predominantly a few countries. Africa is quite bigger. You probably have Kenya, Nigeria, South Africa, and probably Egypt. But yeah, you don't have that even spread. So there's certainly more work to be done there. And lastly, I'll probably mention again, because we're very diverse, unlike places like India and the US, where it's easier to go, I'd say, one shot in ports. In Africa, you need to think about different regulations in the different countries, different languages. There's all these complexities that you have to deal with when you're trying to scale. But yeah, I think lastly, which touches on the support. I've touched a bit on the capital there, but I think partnerships with stakeholders that have been doing this, the likes of the Safaricom, the likes of shared interest, and the work that you're doing, certainly go a long way in enabling startups like ours to leverage those networks and learn from things that you're already doing, but also piggyback on the resources and the networks that you have. Of course, patient capital that understands the the nuances and the challenges of doing business in Africa, but also understands the potential of doing business in Africa. But also mentorship. Mikono also is about holding hands and mentorship with people and networks that, I mean, like Juliana has mentioned, she's run startups before, so networks of people who have done this before and who have been able to scale in diverse markets. These are things that startups like ourselves would learn from to enable us get better and get faster at trying to accomplish what we are pursuing. Thank you.
Thank you, Ivan. So I mean, I think what I take from this is that there is a lot of promise in the dynamism of fintech, but there's also a lot of perceptions around the risk. So like any small business, you are really punching above your weight, but experiencing some setbacks. Even though there's some hope compared to the rest of the world, what is available or to African fintech is still significantly lower, and yet this is the continent where this sector is really transformational. Khanya, what needs to happen?
Yeah, I think my fellow panelists have pretty much touched on everything, and I guess what I will do is just really drill down on the things that I think are important. I think we really underestimate the importance of patient capital here in South Africa. In Africa. I think, particularly in our business, we are a lending business. And so a key driver, for, our future is having debt capital that we can then on-lend, right? And, if you approach your typical, debt funders, they're going to tell you, oh, we need 5 years, track record. We need you guys to show this. We need you guys to show that. And what's really necessary are, you know, those kinds of funders and those kinds of capital providers who will come in and say that we are along with you for the journey. And that's the first thing. The second thing is to say that we are comfortable that in the beginning you do things that don't scale. Because I think that particularly with everything that's happened in the VC space over, you know, the past couple of years, it's been about, you know, we need to build fancy technology. But I think when it comes to like an African context, in the beginning, you have to do those things that don't scale. To get the learnings, you have to be on the ground. Because you find that, you know, you build like fancy technology, but it's actually not suited for the market and people aren't actually going to understand it. So you have to have like those kind of capital providers and those kind of investors who say that, okay, we are willing to come along, we are willing to learn with you. And when that happens, you know, they are, you know, better off for it because they have that first mover advantage in terms of being in the business. So for us, you know, we've been very fortunate to actually have backers of that nature who said that we know that there's a lot of potential. We don't know how we are going to do it. We have an idea and we're comfortable for you guys to go forth and conquer, come back, and we just keep on refining and we just keep on working on the model. So I definitely think that, you know, patient capital is very important. Partnerships is extremely important. In Africa, if you think you're going to sell a financial product, you're in for a surprise. You literally have to go in there with an ecosystem, you know, because, you know, especially like with the guys that we deal with, cash is still very important for them, right? Because I'll take, for example, diapers. Diapers are actually quite expensive now. And a lot of people in the community, because they do live from hand to mouth, you know, they get like their wages on a weekly basis. It's not going to be enough that from that wage, I need to now go buy like a big box of diapers because I'm going to get a discount and then buy milk and then buy maize and all of that. So a lot of spaza stores are actually like, you know, breaking down things. So you see a spaza store selling like one diaper. You see they've decanted maize meal, which is quite a big thing, into like a smaller packet, and they sell that. The community aren't going to go to the nearest spaza store, mom and pop store with like a card, you know, to pay for one diaper. So it's you know, they're very heavy on cash. So what we found is that these guys actually use their product distributors as a form of like a bank, right? I get the cash from the customer, I immediately go and like restock. And that's basically, you know, the life that they live. If you're providing lending into this space, how are you going to get your cash back? Because they don't have bank accounts, right? So you have to have, you know, sorry, this is coming off, there you go. You have to have the mentality of saying that we're ready to collaborate, right? So we work quite a lot with, you know, already existing infrastructure railways for, you know, things like payments, like I've already said. If you go to some of these entrepreneurs and you say, hey, I've got like a working capital solution for you. Number one, it's not going to register because, you know, no one's ever spoken to them about this. Number two, they've been heavily disappointed before. And the only form of credit that they've been exposed to is exploitive. It's a loan shark, essentially. So if you going directly as Setana Capital, you go into, and we did do this. We went to like a local township and we went to the spaza stores and we were like, we want to give you credit. And there was absolutely no interest. And we could have walked away with the idea that, oh, okay, this doesn't. As soon as you work with their product supplier, with the cash and carry that they're familiar with, and you're actually embedding the finance to something that makes sense to them, because what they know is buying and selling my product, buying and selling my product. Now they understand what's going on. And for us, it's an easy way to get distribution, right? So our customer acquisition, you know, is like very, very low. So I just think like, you know, I know I'm reiterating what has already been touched on, but yeah, in our business, patient capital, someone who's along for the journey long term. And that means people who actually have the values of wanting to see Africa develop. And then also working with, you know, bigger players, bigger already existing, you know, ecosystem players as well. And we just slot in, you know, this one aspect that wasn't there.
Thank you. Thank you. So thank you, Khanya, Ivan, and Juliana. I think you've painted a really important picture. We started by talking about the significance of fintech in Africa. Africa is experiencing a significant rise in fintech adoption, and there are well over 400 active startups. Safaricom, who Juliana has talked about, is working with very many of them. And realizing their potential while at the same time empowering them to empower other small businesses. And we've also talked about some of their successes, as Juliana's outlined. While capital is still a real issue, there's some areas of hope, provided we can support our small businesses, including fintech, to develop good or bankable models. However, both Khanya and Ivan raised some very important issues around somebody has to start small and perfect that business model, and support is needed even at that point when fintech is starting. At the same time, patient capital is required. Africa is a very nuanced landscape, even for fintech. Both Khanya and Ivan have outlined some of the nuances that they experience with the very important small businesses driving economic empowerment at a community level. And so partnerships become really key in enabling an ecosystem of support for these fintechs. And that story is not different from any that we hear about any other small businesses. And so the question then becomes, how do we support our fintechs, knowing their significance, their successes, and their setbacks? It sounds like there are three things I would take out of this conversation. It's about patience, it's about partnerships, and collaboration, but it's also about supporting them to improve their business models. I want to thank you all for joining us today. If there are any questions, we will take the questions and our panelists will be able to answer them. And with that, I'd like to close and also thank our audience for joining us today. Good afternoon or good morning.